Good morning, everybody, and this is your Dow Jones setup for today. So we had some really good economic data come out yesterday, which drove the Dow up very rapidly. Um, Although I think tech stocks still took a little bit of a hammering. And what's happened though is we've formed this, I'm going to call it a range bar here, and we do have the oscillators in a fairly decent setup, and then we've got this flag right there, which has formed. So there is oscillator diversions here, as you can see, low, lower, low, low, higher, low. So there's the diversions. There's diversions on the S&P 500 as well, and then this massive range bar. Now I've just put the levels on the top and the bottom of the range bar. There's another level, which is the previous weekly highs, which we spoke about yesterday. But you can see how we plummeted through them, back and up and around, and complete confusion, complete chaos. Bulls wanting to run, bears wanting to fall. So typical of a volatile market. Now dropping down to 3 hour, you can see here's that previous weekly high, and look at how we dropped below it, up above it, on a tear to be honest, and then rejected pretty much nothing off the top. I'm going to readjust the level to here because that should be the actual level that we rejected, and that should have been 44.23, and then we got a big down and then sort of nothing else going into the close. So this is just way too volatile for me, and you can see the minute you start looking at the flag, and that's kind of the flag. Big up, big break. Is that a retest of the flag? And that's kind of where my mind is at the moment. But we are in amongst the moving averages, and moving averages are flat. So we need to look at this on a lower time frame just to see. And bear in mind that the bottom of yesterday is your ultimate stop loss. So that's like a 400-point stop loss, which is relatively rich for me. And not below the 150 EMA either. Looking left, we obviously picked up some structure in here. Very difficult to pick up which one it was, but one of these fractals to the left here is what price actually rejected going into the close, the last 3-4 hours of the session. So basically the afternoon session of the US session. And drilling down to the 15 minutes, you can see there's a fairly decent break of the trend line, pull back to come and test the closest fractal, which was here, and then we got going and then rejected pretty much in the middle of nowhere before falling. Now we're back in amongst the moving averages. So if you look at the hour and the 15 minute, there's nothing really clear that is saying we need to get moving to the upside. Now this here is based on economic data. This here is based on earnings. So the rise was based on economic data and the excitement for the excitement for interest rate cuts, and this here is based on poor performance, and probably people selling out of stocks which are going to be negatively influenced by economic data. Anyway, so volatility is here. I think it's going to be here for a little bit still. So very difficult to jump in. So for me, this is more of a sit on hands. If we do start getting up above the highs of yesterday, come back and test it in a nice structured way, I'd be looking for longs. Not really looking at shorts at the moment, not with that big flag and potential flag break. It could also turn out to be, if I just do that, it could turn out to be sort of a weird megaphone formation, or even start into a channel. So don't read too much into it just yet. You need to get going. We need to get the moving averages crossing over on the hour at least before we get a decent trend. And at the moment you can see the faster moving averages are about to cross over, but then we need to break above the 150 EMA. So my logic is fairly sound as far as I'm concerned. Break of 4423 or 4400, a retest of that zone, that's when I start looking at longs. I'm not looking for shorts, not at all. If you look at the daily zone that we're in here, that we have kind of rejected, it's very messy, but that was a previous all-time high. We've come back to test it as far as I'm concerned, and that, let's just get rid of all the chaos. That there, from a textbook perspective, is a very strong price action pattern. It's almost a piercing pattern, not quite a piercing pattern, but the buyers got going, sellers came in, but they still held a higher close. Now you can see we're starting to get the momentum going forward now. So I suspect we're going to be driving this price up again. It'll probably pull back for another big tail for Friday, and then Monday we're going to be paying very close attention to this daily or weekly high, which we are defending. See, there's a double weekly high, and that's what we're trying to defend. So I don't believe we're going to be dropping below that or closing below that today, but you know, weirder things have happened, and we do have this massive pin bar from last week, so anything can happen. But I think the safer bet for us is just sit back, wait for the high of yesterday to be captured with an hourly close. That should start giving us a big opportunity. But I don't think it'll happen during the session. So anyway, it'll be sit on hands for me until Monday morning. Anyway, hope that makes sense. I hope it helps, and we'll catch up with you on Monday morning. Cheers for now.